Now we talk about something very boring, economic growth and financial markets. Now, on growth, we have good news. The global economy has a lot of momentum. Last year, all the major economies registered very good growth. The United States had 2.3%. Eurozone, people think Eurozone has been in a recession for a long time, had 2.5%. And Japan had 1.6%. India, as you know, 6.5%. And China, 6.9%. All these numbers are very impressive by regional standards. But if you watch news, the good news is not reflected there. The news reportings usually tell you that the people are not happy. There are problems, like trade war. Now we're talking about trade war, the anti-globalization. We're talking about the potential for another financial crisis. Now, why are we living in this kind of world? Even when we have a good growth, people are not happy. This is something that I've been watching for a long time. We have the wrong model for managing the economy. If you look at what happened last year, it is clear that the economic growth is being led by financial markets, not the other way around. When we go to school, we know that the textbooks teach you that the financial markets reflect economic fundamentals. When the economies do well, financial markets do well. But that hasn't been the case in the last few years. Instead, even policymakers are talking about economy will do well because the financial markets have been doing very well. It's the other way around. You look at what happened I'll give you an example, like the United States, because the United States has good numbers. The US market was up 25% last year, stock market, and the GDP up 2.3%. In terms of monetary value expansion, the stock market expanded by 14 times as much as the economy. So coming back to who's happy, who's not. It's not what you got in the economy that made you happy. It's about what you got in the stock market. Most people are not in the stock market. So 2.3% hardly matters to them after kind of a bad economy for so many years. Why would they be happy? But you see that every day we report somebody is richer by another $1 billion, right? So this is where the first bad side effect from managing the economy through financial inflation. It's rising inequality. Okay, rising inequality. Why the inequality has been rising in the world in the last 10 years? You just look at the billionaires in the world. The billionaires in the world are mostly from finance or internet. Okay, and the financial market, both are really driven by cheaper money. Financial guys get rich because asset prices have been inflating. Okay, it's not because what they have done for the economy. This is very different from like in the 80s in Japan, when people who create Toyota, to create Panasonic, Sony, they became rich. Or in the United States in the 1920s, the people who created automobile companies or the steel mills, they became rich. Now the people become rich because they are at the right place at the right time. Somehow the tide rose under their feet. They become rich. So this is where there's a difference in income wealth inequality. When the rich guy is rich because he created something very big, and he takes a big slice of that, like Bill Gates and Steve Jobs, it's beneficial for the economy. When the economy is not growing, somebody is becoming very rich, you have to be very suspicious. The guy must be taking something from somebody, no? We worship internet guys. What do internet guys do? You know, we have computers everywhere except in the economic productivity. There's no productivity there. When people are watching their mobile phones, how could they be productive? So we have now the whole world is, the 7 billion people in the world, they all become phone zombies. So I doubt that the economy will do very well in that kind of technology. So this worship of this internet technology is really bad. So first thing, side effect is that the financial market-led growth is bad for inequality. It makes societies less equal. This is a major contributor to the Western this anti-globalization sentiment. You look at the countries that are less kind of into finance, like Japan and Germany. They haven't grown faster than the US, but they have much better societies. Why is that? Because they don't let their financial markets not so developed. They don't let you speculate. And in this kind of society, CEOs are not paid a lot of money. While in markets, in economies with a kind of a strong stock market, CEOs are paid a lot of money. So this is where I think we have to think about, is there all right to manage the economy with finance, right? So this is one thing about internally increasing inequality. Internationally, this financial markets-led growth also very bad. Why? We talk about an imbalance. What is imbalance? Imbalance is East Asia has big surplus, and Western economies have deficits. And Donald Trump complains about it all the time. A major contributing factor is financial bubbles. Why? I've been looking at how the financial bubble influences the economy. It is different in the East versus in the West. In the West, financial bubbles encourage people to consume, to spend money. In the East, financial bubbles encourage people to invest more. It's just the nature of the things. So every bubble leads to what? Leads to more investment in the East and more consumption in the West, and a big imbalance, more imbalance. Then then Trump becomes less happy. You know, Trump is being, the stock market up 25%, and he's cutting taxes. So encouraging people to spend more money, then the budget, the current deficit goes through the roof. It goes up and more. So there's more reason for trade war. He's talking about tariffs on this and that. So financial market-led, managing the economy with the financial markets is not sustainable. Its side effects are just destabilizing. In the short term, you get a little bit of growth, 2%, 3%, but in the long term, you get a lot of problems. So if this model is not sustainable, how this thing is going to go down? Yeah, it's been like, this thing has been going on for 30 years. Like I used to see, when I was working on Wall Street, I used to see all the guys, like big fund managers, and they kept saying, this thing can go on forever, right? So bubble after bubble, this thing can go on forever. So financial guys love bubbles, you know. So but it's been 30 years since Greenspan came to power. 30 years. We've been going one after another. So this one will end. But after this one, could we have another one? So there are two questions. When this one is going to end? The other is that, are we going to have another one? All right? So I think that this one has been going on for 10 years, right? Since 2008. Now, this one is somewhat different from the previous ones. The previous one was driven by markets. This one's being driven by governments. Yeah, you know, quantitative easing. The Federal Reserve expands the balance sheet by $3.6 trillion. The U.S. budget deficit. Now, even when the economy is growing like that, $1 trillion deficit for as far as your eyes can see. Okay, China's money supply quadrupled in 10 years. Yeah, so it's all government has been doing that. It's not the market. So that's why this bubble has been lasting so long, because of the market. But I see that there's a weakness in this thing. Is that we see in the both the US and China are tightening. Why are they tightening? They're tightening. They're scared, okay? They're scared. But China is tightening the property market. The property bubble is really worries the government about the potential for crash. You know, any tier 1 city has land value more than the whole of the land value in the United States. It's just one city, right? So, so the government is really worried. So they're tightening the property market. The money supply in China is, for the first time, is falling below the economic growth rate. Okay, last year, the nominal GDP expanded by 11%, and the money supply about the same. But this year, the money supply is rising at 8%. So obviously, this is tightening. Okay, and the United States, you look at the bond yield is rising above inflation rate for the first time. For the first time in 10 years. And it's not very high, but at least it's threatening the bubble. And Donald Trump is not helping. The budget deficit is going to grow from like $650 billion last year to about $1 trillion. So there's a lot more demand for capital in the market. And then the US savings rate is not going to rise. So all this extra deficit has to be funded by foreign capital. That means what? The US interest rate has to rise. So that is, this is a kind of a given thing. So you give it some time, the bond yield in the United States will rise over 4%. So the twin forces that's going happening in China and in the United States, I believe, will lead to this bubble going down next year. No, it's gradual. It's next year something is going to happen, right? And this thing has been going on for 10 years. Usually, on average, it goes on for 6 to 7 years. So already, it's been much longer than what we have seen before. So I think this thing is going to go down next year. So if you think this year, the market is, I think, is going to go up and down. And I think we have already seen the high already. So it's going to go up and down, because people still think the trend will continue. So they always, every time it goes down, people come back to buy. But the liquidity is not there anymore. So you cannot get new highs. So we're going to have this up and down for 12 months. Then one day, people realize the trend is not going to continue. Then they cut and run. That's when it pops. Okay, so could we now after these pops, what would happen? Would we create another bubble? It's possible. It is entirely possible. The ultimate source, the reason why we have bubbles is because the US dollar is the reserve currency. And the people all over the world, especially in East Asia, believe in the dollar. So you can overprint the dollar. When you overprint the dollar, obviously you create excess liquidity. And especially we have this weird global monetary system. The dollar is the reserve currency, but it's supported by East Asian countries with their currencies essentially pegged to the dollar. And East Asia is where production and savings happen. So the dollar is kept afloat by East Asia. So the Fed feels like it can print the dollar with no consequence. So when the dollar flows to East Asia's monetary system expands even more than in the United States. So this is kind of a turbo monetary machine that's been going on for a long time. So as long as this machine stays, the bubbles will come. So the sign of the bubble stops is what? When Chinese currency goes up, like the Japanese yen in the 1980s. As long as China does not appreciate its currency, all the East Asian currencies will not appreciate. And these countries are forced into buying US dollars. And the global excess liquidity can be created. So that's sort of so personally, if you want to get rich in this world, it's all about buy low, sell high. Now when you go to school, you say we investing based on fundamentals. It doesn't work. It hasn't worked for 30 years. Even you look at Warren Buffett. Warren Buffett extra performance is all from buy low and sell high. When there's a crash, he buys. So that's his extra performance. So this is sort of if you didn't make money in this bubble, you have to wait for another one. That's how it works. You pray, another bubble will come. Okay, now how this world is going to end, and when we are going to have a normal world, I'm at a loss, because that globalization is fundamentally, in my view, not sustainable. Because globalization is putting people who are very different together in one economy. Like in East Asia, people like work, save, right? And in the West, people work a little, fun. Yeah, let's have a good time. So how now East Asia now is like 22 some trillion dollars in the in nominal GDP. The West is about $40 trillion. But the East Asia savings a lot more than the West. So in one global economy, what it means that the East Asians will own everything in the West. That's how mathematics works. If one side saves more than the other side, eventually all the assets on the other side will be owned by the other. How politically is that possible? This force is only kept at bay by the story I told you about the US dollar. The Fed is issuing extra dollars. So instead of owning the assets in the West, the East Asians are holding these dollars. And the West does not feel the political implication of this difference between the East and the West. Because all these excess dollars, nobody feels the pain in the West. So as long as the East and the West is so different, this tension will exist, will be there. Especially when China becomes much bigger than the United States. I think that the Chinese real economy is already much bigger than the United States. China's energy consumption is like 50% more than the United States. Electricity system is 50% bigger than the United States. Everything you talk about, like the automobile, like anything physical, China is much bigger than in the United States. The U.S. is bigger because what? Because of a haircut costs $10. In China, the haircut costs $1. That's the reason why the U.S. economy is bigger than the China's economy. So eventually the East will become much bigger than the West. So I think that what I see is that the West is becoming a destabilizing force. You're going to see a lot of political turmoils in the West. You know, this is unfortunately a reality we have to live with for a long time. So for like emerging economies, I think the key is to shift towards South trade. Okay, how this world is going to continue to grow at a sustainable pace and economic development happens. In the past, the globalization or global trade was based on the wealth in the West. The wealth accumulated over centuries in the West supported the consumption and the demand for global goods. And that supported the production in emerging economies. So that model was based on the wealth in the West. But you look at the wealth in the West has depleted a lot. Deficits, no investment, it means wealth is not growing or even declining. So, and that model is not sustainable. So over time, emerging economies have to trade among themselves. How could the poor people trade among themselves and become richer? That is the question, right? So this is where I see that the most important thing in economic development is economies of scale. Through economy scale, efficiency can replace wealth for wealth creation, okay? So this is where China has a lot of problems But China, one thing China has done right is economy of scale. And China, at the heart of Chinese economy is economy of scale. This is from, it doesn't matter what you do, from infrastructure to manufacturing to urbanization. Think big. Donald Trump had one idea that worked out for him, is think big. So this is where I think that I think for emerging economies, you cannot think small. You have to think big. If you kind of want to have a small scale and production, and you figure out how much money you're going to make next year because that you supply 10 units, so you can have a good price and you can make a profit. It doesn't work that way. You have to think about what the size should be 10, 20 years from today. Go for that. Then you don't make money in the short term. What do? You do whatever it takes. Maybe there's stock market bubble. You try to get some money to keep it going. So that is the East Asian model. So this is where I think that it's not a business as usual. And everybody in emerging economy has to think differently. What has happened in the past cannot continue into the future. And we have to chart our own economic path. The most important thing is to have economies of scale. Focus on what you do. Like India, like 17 years ago when the governors invited me over, one advice I gave them was that do things is big. So why don't you focus on creating like 10 super cities, like with 10 million people or 30 million people each? Then that's the economic development. And it's not about everywhere. It's about a focus, economy of scale. And so the backlash against globalization in the West is not the end. It's not the end. There's another path going forward, especially for countries with a huge populations like India. Go for economies of scale. And go for low price economy of scale. Economic development will happen. I'll stop here. Thank you very much.